Buying and holding onto an investment to watch it grow is intuitive. It can be lucrative, but is it all it's cracked up to be? With all the best and most advanced investment strategies out there, should you even waste your time with this methodology? Well, thank goodness there are channels out there just like this one that make videos on topics just like this. When you're done watching this particular video, you'll know why buy and hold, the most obvious and least complex strategy, is still the best. So, lovingly, tenderly, gently, smash that like button for the YouTube algorithm, and let's get started. You're watching Finance Squared, and I'm your host, Derek West. And on this channel, we love talking about all things personal finance, including stocks, bonds, cryptocurrency, real estate, and of course, the strategies to be successful in investing in any and all of them. And that certainly includes the buy and hold strategy. If you're all about that life as well, be sure to subscribe and turn on post notifications. You know, the little bell, so you don't miss any of our videos when they drop. Now, with that boilerplate stuff out of the way, let's talk about buy and hold investing. Buy and hold investing is a tried and true investment strategy. Now, I'm no historian of investing, so this next statement is probably being pulled right out of my rear end. But it's probably the original investing strategy. A lot can be said about buy and hold investing, but to make sure we're all talking about the same thing, let's first define what it is. The buy and hold investing strategy is where investors buy or invest in securities or other assets for a long period of time with no intention to sell in a short period of time, if ever in some circumstances. In other words, it refers to investing for a long period of time by retaining the investment, usually ignoring the ups and downs in individual market indicators and signals over a short period of time. If you are an investor who adheres to this strategy of investment, then you're relying on the companies or the cryptocurrency or the real estate. You're relying on its fundamental analysis. This analysis includes factoring in the performance of the asset, its long-term growth strategy, and consequently, its growth potential. If it's a company, you're looking at the product it offers, its competition, its market segment, its regulatory burden. If it's real estate, you're looking at the location of the asset, its ability to attract renters or buyers, the trajectory of the neighborhood, the city, the state, or even the country where the asset is located. You're also checking out the prospective maintenance cost, insurance cost, property and other taxes and fees, its prospective monthly, quarterly, and yearly rent potential, and of course its prospective appreciation. And let's not forget, if you're building new or even upgrading, you have to consider the construction costs also. If the asset is a cryptographic token, you're looking to consider the value proposition of the individual token, its utility to its user. Can it compete with Bitcoin and Ethereum? You know, the heavy hitters in the room for the moment. Can it gain traction amongst crypto enthusiasts like Dogecoin or Shiba Inu coin? Will it be susceptible to pump and dump schemes? And many, many other factors. This is, of course, not an all-inclusive list of potential things to consider when looking to invest into an asset long term. And this is definitely not an inclusive list of items that one can invest in long term. That's one of the most beautiful things about the buy and hold investing strategy. If you have a long-term vision for your investment horizon, the sky is pretty much the limit. So we know what buy and hold investing is. Let's talk about its advantages. As you're probably well aware, buy and hold investing has several key advantages. For example, its lower aggregated fees. So with buy and hold investing, you generally make one investment one time and wait and watch it to grow over time. Some folks may argue whether dollar cost averaging in an investment, in other words, picking a single asset that maybe you can't afford to purchase all at once at the moment, but investing in fractions of it repeatedly and consistently can be considered buy and hold. In my mind, it can, but it's a separate topic for a separate video. Like and subscribe. In any event, there's a distinct advantage to this strategy, that is buying and holding. That is that your brokerage fees, your advisory fees, your sales commission, they'll all be relatively low with this strategy, saving you a ton of cash in the long run, which is more cash that you can plow into your investments and growing your wealth overall. And also with this strategy, the difference in long-term versus short-term capital gain comes into focus. Now, what is capital gain? Well, capital gain is when you sell an asset for more than you paid for it, resulting in you gaining on your capital. This is defined by the IRS or some other investment governing body. The tax you pay for that gain, at least here in the good old US of A, is dependent on how long you held the asset before selling it. If you buy an asset, get a gain from it, and sell it less than a year after purchasing it, you are liable for short-term capital gains taxes for those gains. If you do the same, but instead sell it more than a year after purchasing it, you are now liable for a long-term capital gains tax for those assets. Short-term capital gains taxes are typically more expensive than long-term capital gains. This means that the IRS is telling you that long-term capital gains are more favorable for you, the investor, at least in their eyes. Short-term capital gains taxes are typically taxed at your income tax percentage, which should match your tax bracket up to 37%. Again, here in the good old US of A. Long-term capital gains are taxed at a graduated threshold between 15% and 20%. The tax rate on most taxpayers who usually report long-term capital gains is 15% or lower. I say all that to say that the tax burden on buy and hold investments that are held for at least a year is much more favorable to the average investor. I will note that the Biden administration is proposing raising this particular tax bracket on earners who earn $1 million or more, and that would be added to the 3.8% investment surtax on higher income investors. Now, your total tax could approach 43.4%, just something to keep in mind for the upcoming couple of years. This entire segment of this video could be invalidated. But in any case, the other thing about the buy and hold investment strategy and why it's so popular and profitable is that it's easy to understand. It really doesn't get any simpler with investing in terms of strategy. Pick an asset class, research it a little bit, make sure it looks good, buy it, hold it, profit. Really? Yeah, really. It's that easy. Whether it comes to real estate, stocks, crypto, not that difficult to understand. With other strategies such as day trading for stocks, crypto, and other assets, and other real estate strategies out there, there can be quite a bit of complexity to executing and understanding the investments that you're holding. But with buy and hold investing, it's really simple. And it's also simple to execute. And this is especially true nowadays with all the tools we have at our disposal. In the past, only real estate could be invested in with such ease. Now, one could argue that of the big three, real estate is the most complex to invest in, with all the paperwork that is required and multiple hands you can touch and sign off on the investment, particularly if you're getting a mortgage or a hard money loan to acquire your home or asset. But with stocks, it's never been simpler. You just download an app on your phone, pick a market segment of the stock, and boom, there you have it. You're set. Now you just have to forget. The same with crypto. Although one could argue it's more complex than investing in stocks, that's a topic for another video. One could have argued as little as 3 years ago that crypto was pretty complex to invest in. You needed to get a wallet and a wallet key and maybe mine a crypto or purchase it from somebody else on a shady website somewhere. Well, all that is still true depending on which crypto you pick, but the apps that surround that process nowadays make the process really simple. You're almost doing yourself a disservice if you have no crypto plans, since right now they are the assets that have been making the most noise over the last year or so, although they have been very volatile. Actually, that's an awesome segue to the disadvantages of buy and hold investing. Long-term viewers of my channel know that I'm going to tell it to you like it is. There is no investment strategy, asset, or methodology that is foolproof. That's certainly true of buy and hold investing, which is why we should discuss a couple of obvious downsides to the buy and hold investment strategy, namely the high risk tolerance required for investing. With buy and hold investing, you are required to ignore all the negatives and even positive up and down swings of your asset and be a steely-eyed investor, stoically holding on while the world seemingly falls down around your ears. For example, in the housing crisis of 2008 and 2009, people were selling their properties left and right, as hundreds of thousands, maybe millions of people were underwater with their mortgages, meaning they owed more than the mortgage than their house was worth. Many people simply refused to pay and walked away from their home, or had it foreclosed on, and in either case returned back to the bank. If those same people simply held on through the worst of it, waited for 3 to 4 years as prices came back up, and even better, held on for the 10 years after that, they might have owned assets that could have doubled, and in some cases tripled or more in value. Those investors, well, if we're being honest with ourselves, most of the folks that walked away from their homes were probably not investors, but homeowners who didn't know any better. In either case, they had very low risk tolerances. When they first bought the houses, they assumed that the prices would keep going up and up and up, which is an incorrect assumption for any asset class. But when their home prices started to fall, they assumed that they would keep falling, all the while they owed a ton of money on it, not thinking to themselves to hold on for a couple of years to see if the asset could break even or even grow past the original investment. It's a similar story for the Corona crash of 2020. If you sold all of your stock holdings for the March to April timeframe, when stocks seemed to have no bottom and oil futures were literally negative, they were paying you to take delivery of oil. You sold at the bottom of the market. In this particular case, all you had to do was wait it out for 3 more months. By about the July to August timeframe, the market had been restored to its pre-pandemic levels, and by the end of the year, it was actually up. Now, it could have been true that market crash could have been the beginning of a multi-year bear market in which your participation in it would mean that you would not have made any money for years and years. But even bear markets turn around after a while. For example, the Nikkei index in Japan between the early 90s and literally February 2021, the Nikkei index was negative. If you had held on for the roughly 30-year period, you would have broken even. If you held on even longer, you would have made money. So it's true, markets don't always go up, and there is a real risk to a buy and hold strategy. And to overcome that and profit, you need to have a high tolerance for that risk and a ton of patience, which means as a buy and hold investor, you need to be willing to go to zero. If you were a buy and hold investor, you have to be acutely aware that your investment could be theoretically worthless if you hold for a long period of time. And the thing is, you have to be okay with that. To have that level of maturity, you need to have a couple of things on your side. You need to be in a good place to invest. That means that you're not investing with your grocery money, your next month's rent, or with your grandmother's heirlooms. Before you become a buy and hold investor, you would be wise to first save up an emergency fund. It doesn't have to be much, maybe 1 to 3 months of your needs-based spending. And needs-based spending would be food, shelter, transportation. Some people save up 6 months of expenses. Some people save up a whole year. Others have a specific number target in their mind, like $100,000 or $200,000 saved up. Don't go too crazy. Just find a goal and hit it. You're also going to want to invest in solid long-term growth investments like index funds or ETFs that track solid indexes like the S&P 500 or the Russell 2000, who have made on average 8% yearly for their investors. Now, some years it's down and some years it's up, but over a span of about over 70 years, it has averaged between 7 to 11% return on investment for its investors. But once you have those investments sewed up and an emergency fund in place, you should have the confidence required to be ready to go to zero with an investment that you're looking to hold long term. You also want to make sure you invest in a YouTube channel that tells you it like it is and drops all the tribal knowledge for all to see and benefit from. You know, a channel just like this one. Speaking of which, subscribe to this channel and turn on those post notifications so that you get videos just like this when they drop. And while you're in an engaging mood, drop us a comment on buy and hold investing. Are you in a position to buy and hold? Do you have your emergency funds sewed up? What about your long-term investments? We're all dying to know. And be sure to like this video if you like this video. Share with your friends on social media and via email and smoke signal and carrier pigeon. Actually, I'm not sure if YouTube is done with a carrier pigeon integration yet. But remember, a goal without a plan is a wish. A goal with a plan and no action is a wish list. Thanks for watching, everybody. Now, every view on this channel really means a ton to me, and I can't express my gratitude with more fervor than this. Mostly because I'm a bad actor. I'm kidding. And while this channel is still pretty small, all of your views means a ton to me. So I'll catch you guys next time. Peace.